right, so we're gonna go ahead and start with our trend journal like we usually do. And so we are on actually a day 13 of a technical downtrend below a 30-day moving average. And so even though the last few days have been a rally attempt, we had a rally attempt starting on day four, so we do one, two, three, starting on the 22nd, and we've had a retracement pulling up to the upside, but all in all, in a larger time sense, we are still in a midterm downtrend. So we are on day 13 of that. We've had a couple. Today was a wonderful kind of downside reversal to confirm that we are kind of still in this downtrend. We're below it, got rejected from our 30-day moving average. SPY got rejected from its 50-day moving average, and the QQQs and NASDAQ are below their 21 now as well. And then you've seen kind of that breadth as well, where today utilities and cannabis, they were kind of the leading stocks. And utilities, when that tends to be more of a leading factor, that's more defensive and more risk off environment instead of being in a risk on environment. And then you've seen a lot of oil kind of to the downside today and tech. They had some of the biggest moves with some of the semis. And so that's not a positive thing for the market. And then we had pretty mediocre earnings for everybody today. Amazon being the best one, and I don't know exactly. One of our thoughts in chat today was possibly Amazon releasing a dividend. I don't know if they did or not, so that'd be kind of interesting to look into. So we'll go to the QQQ chart on a daily and kind of show what I always look for and look at. So let's just go to here. No dividends. God damn. That's okay. Well, so we'll start at the weekly chart for the QQQ. What's up, baby? No, thank you. Save it for me. Thank you. And so we'll go to our 10 SMA, which is one of the levels that we want. We want it to be above a 10 SMA on a QQQ on a weekly chart. In those strongest markets tend to happen above a 10 SMA. So notice here, whenever we were above this 10 SMA, swings were working, markets going. It's an easy penny environment. Easy dollar environment. Same with here, we break above the 10 MA, continue higher, it's an easy dollar environment. So on a weekly chart, we are below that 10 MA that we want it to stay above. So that alone is kind of a red flag cautionary symbol. We did come right into our fair value gap on a weekly chart here, and we are already pushing away from it. So internal liquidity seeks external liquidity. Our next target theoretically would be this 412. And it doesn't look like we're going up. So the only thought for me was, okay, is Amazon really going to move it and is that going to have it to go to the upside? It's not fully looking like it. And so then if we go to a daily chart, go to our 50 MA and our 21 MA, and we'll turn this to a 30. So you see today, yesterday we actually got almost to the 30-day moving average. We barely got above your 21-day, which is this green line here. Let me switch these so they are two different colors, much different colors. We'll do purple on that one, a little thicker. Boom. That's your 50 day. This larger one is your 50 day because it has more meaning to it. We haven't been below a 50 day since this level here, since November of 2022. And so to me, this is more looking like something like this where we're coming up to that 50 day and getting rejected. And that's kind of, we didn't even make it all the way up there. So we got right to this fair value gap, this weekly fair value gap into the midpoint, rejected from the 30-day, rejected from the 50-day, and notice that 30-day is starting to downtrend. That 30-day is flat, the 50-day is flattening out, then your 21-day is in a downtrend as well. And so that's kind of just also little red flags, more of a cautionary environment. You don't want to be buying a ton when you're starting to see this on This could be a set for a move back down to here, and that's perfectly would be normal. And so, and that's just with the trend. Then if we look on a monthly chart, I was mentioning this a while ago. This is what it really reminds me of on a monthly. This monthly here, let's go erase some drawings. These two candles, the previous month and this month, look a little similar to this right here to me. These candles here. And this is where we can use previous data to kind of tell. We have 1, 2, 3, 4, 5 up months, and then a kind of a doji engulfing, and then a couple down months, and then we went 1, 2, 3, 4, 5 up months. Now we've had that engulfing with a kind of it kind of formed as a doji. If we were gonna put up here, it would have looked way similar, but this almost looks worse now because it's a larger candle on the on the monthly chart, and we closed outside of this monthly fair value gap. And so this would be the fair value gap here. Not very big, but from there to here, and we closed outside of that. So that is kind of more of a red flag as well. And that's kind of where I'm really looking to come back to. Q's, it looks way different, at least here. But this, probably a 10 MA on a monthly chart would be fine. Because then if we put an anchor VWAP, where's the best place on this monthly chart to put an anchor VWAP? Right here. So we should find some sort of support at this anchored VWAP from this October low. And so I'm not really in any hurry to buy. How much merit does sell in May, walk away have? It's mediocre. May is usually a not a good month, but not a bad month. It's more of a choppier month. And then yeah, I haven't looked at Bitcoin today, but this yesterday didn't look great. Yeah, this is also below all your moving averages. Doesn't look wonderful. But it's at a spot where if it's gonna bounce, it's gonna bounce right the fuck here. So yeah, but statistically, we are still in a section where we are more for the year. Statistically, we are still bullish, and we can still continue to the upside. So, but I'm not, that's why right now, until stocks really start playing out, I'm just day trading. All I'm doing is trading the opening range break, and that's just making it easy. If you look at your average stock right now, they don't look good. So I'll just go to this random one, which is Starbucks, down 11% from earnings. Really, really bad. This is in a downtrend. It's below your 50-day, below your 21-day, below your 10-day. It's in a downtrend. AMD and mediocre earnings. Actually, let's look at AMD's earnings while we're here. Did they come out on Deep View yet? No, wrong button. Data panel. So let's see. Ag. There they are. Q4, Q1 2022, 2024, we have 0.62, which is less than last quarter and only up 3% for year over year. And then sales, 5.47 with a 6.17 from last quarter. So again, down quarter over quarter with their sales. Not great. Not at all. So now that we know AMD's out, let's check on some other ones. Amazon, holy fuck. Up 276% year over year. up 13% quarter over quarter, actually roughly 12. This looks crazy. Q1 2023, 0.31. Q1 of 2024, 1.13. Sales aren't up the craziest, but their earnings per share is insane. Amazon's chart doesn't look the greatest. It just looks like it needs more time. Look at it. There's a 50-day. It's getting rejected there. 21-day, kind of below that. I think we are. Where are we after hours right now on Amazon? AMD is down. Amazon is up $5 next to nothing. And so that's definitely that Amazon had pretty good earnings. Let's look at SMCI. That was another one. Holy shit, they had really good earnings too. Are they up? No, they're down. I wonder if it's their guidance. They're down to 812 right now. SMCI is down here, but they had really, really good earnings. 655, 65. That's 300% year over year gain over their sales was mediocre, but their earnings per share was phenomenal. Wow. Yeah, so SMCI so far, this is the winner for earnings this year. Still doing really good. Seems like the later part of the earnings is always down regardless of performance. Yeah, and it's a lot of what are they saying and for guidance is wise as well. But SMCI on a monthly actually it wasn't a bad month. Only down 14% after 3 months of 300%. Like it's only down 14% from the close of last month. That's not bad. Not bad at all. So SMCI is probably, and it's gonna open down here 812. Wow. 786. Holy hell. Curious of what they say, what they said. They had really, excuse me, they had really good earnings. But again, look at where they are on a daily chart. You couldn't, with this whole move up, you couldn't even get above your 50-day moving average. If you're not above a 50-day, it's essentially just not as good to buy. Every time it has good moves, it's above its 50-day. The whole time it had this whole move, it was above its 50-day. It was above its 21-day even. So that's just definitely something to keep in mind. Just like if it's below its 50-day, I'm always more cautious. And then how was the, let's look at how the breath was today. It's not going to work on my laptop. Piece of shit. Here, Isabella. Up on volume. 33 stocks up on volume today. Let me move my head. It's down here at the bottom. And then we go to down on volume. And we just see what the difference is. 224 stocks down on volume. That just shows how kind of weak the breadth is, where you have just a ton more stocks, almost a 10 to 1 more stocks that are institutions are distributing versus institutions are accumulating. So when a stock is down on heavy volume, institutions are distributing. It's not your average mom and pop retail person. It's institutions. When it's up on high volume, it's institutions accumulating. And so that's how you can kind of tell whether it's institutions or not. So that's kind of another key for that I use for to see market breadth. So we've seen mediocre earnings. I want to see Starbucks, see what they did too. Last one for earnings, -8%. Notice the decrease. Like this is why they go down. If you're curious, sometimes it's like, why do stocks go down? Look at their earnings. Or why aren't they going up with their market? Look at the earnings. Stocks aren't crypto. They're not just indices. They actually, a lot of times, have a reason or need a reason to go up and down. And in their fundamentals tend to be one of the best ones. Look at here. You have a 25%, 19%, 30%, kind of everywhere, but it's not doing great. Their sales are mediocre. And then now you're going 1, 9, 68. You're seeing decreasing sales and a less and less in EPS over the last 3 quarters. So, of course, what's happening? The stock's going down. There's where you can see your fundamentals with your earnings. SMCI, wonderful example. You've seen this increase in earnings over the last few quarters, especially if you go back more. One, you bastard. Or not, apparently. Okay. Well, if you go back more, notice here it's 270%. And now they had good earnings. They went sideways as they had decent earnings. And then it started having good earnings again, and it started mooning again. And so that's where you can kind of see that correlation between earnings and the in the market in the stock. Look at Nvidia. Q3 of 2023, 427%. That was this earnings. That was right after this earnings. It already moved a lot. Q3 of 2023 was the first earnings of 2024, and it had a look at the move that it already made. Boom, it already made a huge move, and then next earnings super good. It was moving because it has great earnings. And this Q4 2021, they haven't done earnings yet this year, I don't think. So this might be a mistake. Deep view is still kind of iffy sometimes. But then for currencies, let's go to UJ. Actually, let's go to DXY first. That's all for earnings. DXY, this big ass bull flag. Last time we were mentioning above NVIDIA ER 522. Yeah, that's what I thought. They have not had earnings yet. Boom. Last time we were talking, if we can get above here, we're going to come to this level here. We created a fair value gap. Boom. And we're continuing. Looks like we're continuing higher. Our next target would be to this high at 107.33, 107.31 on the weekly chart. And somebody mentioned it this morning, and I absolutely agree. This looks like just one big ass bull flag, something like that. If you want to use retail, that's a bull flag. Come up, come down right to the 10-day. 10-day moving average. That means it's not even come down below the average of the last 10 days. Now it's breaking out. So this is definitely looking like the dollar is going to continue. So your euro is probably going to be bearish. Oh yeah, minimum coming to this level, if not this level. I really like the euro for shorts here. GBP, nice rejection. Look at everything that it's rejecting. 10, 21 day, 30 day, 50 day, 10 day. Yeah, 21 day, 30 day, and 50 day. Rejecting all of that. So it's most likely going to come to probably these lows. At least these lows. Maybe catch at this fair value gap, but it's probably going to come to these lows. So currencies definitely all kind of look bearish. Notice this respected this fair value gap. And then we're coming down. This is probably going to target this low, if not this low. The low-hanging fruit would just be the low from last Friday. And so a lot of these currencies look absolutely horrendous. UJ, it hit our fucking target finally at 160. This thing was insane to play. I personally have not traded this in a while because of how nutty the moves have been. See, this is our target to take out this 1990 high. We've been talking about this for a freaking while. That this was just a basic, on a monthly, a basic Mark Minervini style of volume contraction pattern where you've seen it come up to make a high, come down, come up, make a higher low in a smaller contraction, and then break out. And that's exactly what it did. We actually didn't take out that high. We left almost equal highs right there. But we came right to this high, see here, but we never took out the exact high spot. It made almost the exact, almost made a perfect touch to it though. But look at some of these intraday moves. This is why, in my opinion, this is harder. Like, you would have to really be paying attention. It's not something that you can kind of set and forget because you're getting shit like this. This wick right here, that's a 141 pip move. 136 pip wick. That'll fucking take you out of your account if you don't have a stop loss. And if you do have a stop loss, you'll get stopped out and immediately it'll come back. And so like that type of shit is just nutty. Right here, this is a so I'm not personally trading this too much unless it's more of just like short term. Um, 100 ticks in less than 15 minutes for that wick. And then here, we went down 2%, 400 fucking 400 pips in an hour and 15 minutes. So you're just getting wild moves on UJ, and that's because the the Bank of Japan doesn't want it to be this high. So now it's become not just a technical analysis. Now it's became more fundamental, where the Bank of Japan does not want it to continue going higher. That just puts Japan in a recession. And so they're going to intervene like they did, and you're going to see these fucking crazy moves. Yes, you can capitalize off of them, but make sure you're using proper risk management. In the evenings, I'm usually either training jujitsu or with my family. I'm not sitting there on the charts the whole time, and so I'm not risking getting fucking destroyed by one of these moves. These are a 15-minute candle. This is a 15-minute chart, and look how insane this is. I walk away to change a diaper for fucking 20 minutes and I'm gonna be licked. Not happening. So that's freaking UJ. I'm glad it hit our target at least, but not really tradable for me personally. Um, then let's go to gold. Almost came to our 2500 target. It came to 2450. It came pretty damn close. And that was over here. We were calling 2500 in the next 4 weeks, I think we said, and it happened in 2.5. So we did pretty well on our target there. And the GC futures contract, this is kind of just looking like, is this just a retest of these highs? So we're gonna have to see is if it's gonna bounce or if is it gonna just continue higher. The monthly candle, it's actually not fully closed yet, so this monthly candle is gonna look like shit. And that's not really great. It kind of reminds me of this month right here. This monthly candle in gold looks horrendous. Let's see if XAU looks any different, if they finished or not. Nope, still looks pretty bad. Yeah, so the monthly candles on gold don't look great. And how about oil? US oil. The stocks are still setting up on oil, but again, the monthly candle not great. The weekly just kind of looks like a bull flag. It looks like it could start a base here. But there's nothing interesting on oil right here. Nothing at all. You're at your 50 day. The only interesting thing on oil actually is XLE if it didn't break below its level. Ooh, which it's getting very close. Right here. So we have a kind of a long term, this one again, very basic pattern, sending triangle, um, whether you want to call it a volatility contraction pattern, I don't give a shit. Made a accumulation pattern, broke out, and now is retesting it. So if it can hold this retest and go sideways for a few weeks, then this would definitely look proper. Sorry, I thought my daughter. Oh, okay, sorry. I thought my daughter fucking cut herself or broke something. So, that's kind of what we're looking at with oil. I'm more interested in XLE than the US oil. The US oil chart looks fucking terrible. It just looks mids. It's going sideways. XLE will be outperforming at that point. Yes, XLE is actually right now outperforming a lot of things in the market for ETF wise. XLE is it's up 10% for the year, and a lot of other ETFs are starting to go break even. And so yeah, this is looking pretty decent. In a sense of ETF wise for sectors, there's not been really the only main sector that's been outperforming is marijuana. And we were talking about that. I was just like 3 or 4 weeks too early on this. We noticed the huge volume skyscrapers that it had been putting out way back here. And then, no, it was on MSOS. These volume skyscrapers, boom, heavy volume to the upside, low volume when it's sideways, heavy volume to the upside, low volume when it's sideways. And so this is just one that I was just a little too early and then I wasn't paying attention to. So that's my fault. I really should have been. And so your sense like your ETFs today, nothing was really outperforming. You had everything kind of just doing bad. This is the healthcare. It's pretty much it's like at its yearly candle. This is where it opened for the year. It's only up 3%. XLP up a little more. So like not a lot is up a ton. XLU is almost doing better than most other stocks, most other ETFs. And again, that's not great at all. Look at and ARKX is just sideways. It's actually down. And you can kind of you see all these sideways performers, and it really shows how little of money is in the market. What's up? 1 second, guys. But yeah, so those are kind of what we're looking at for ETFs. SPY, I really want to see it. It's above, what is this, a 21 week? Yeah, 21 week. I want to see it come back down to this 479. That would be wonderful. But we're right at this 21 week. So if we break below this 21 week, that'll be the key. So next, want to just kind of go over today's opening range. We've been trading this orb strategy pretty much every day, and I'm doing it live on stream for the first few hours. I'm not doing the whole time. And like yesterday we had a huge orb, which was interesting. It was 118 points. And as soon as this, excuse me, as soon as this 15-minute candle finished, I told everybody we're not trading today. I knew everybody wanted to trade. It was should have been a great day, but it wasn't there, and we're not going to force anything. And guess what? You had no 15-minute candle close outside of the orb. So this is where you can tell it. This is how you know it's a no trade day. No 15-minute candle close outside of the orb. So then today we had a little bigger one, and I wasn't I wasn't streaming because I was supposed to have somebody uh work on the internet around my area. But you have here, you try to break over the orb, and notice the 21, the 30, and the 50 day, and the 50 EMA on this 15-minute chart. They're all trending down. They're starting to kind of roll over. So that's just kind of a tell beforehand to say, okay, this might be going to the downside, and these might be failed attempts to the upside. So we had a few failed attempts to the upside, and then finally a breakdown here. This first close outside of your candle. So we go short here, and we did this live on stream. Well, I wasn't streaming, but I was like talking just because I wasn't sure if I was going to have my computer just cut me off, which it ended up doing after a little bit. And then we said our target is this 2 standard deviation. and that was where we were looking to cut. And so it came down. There's your entry right at the close of this candle or at the retest. It retested absolutely perfect on that next 5 minute candle and held the range to the outside, and then continued lower. Right, got to the one standard deviation, based out for a little bit, tried to kind of consolidated, and then continued to your two standard deviation. 1 second, baby girl. Sorry, my daughter is homesick and is trying to cut lemons. So yeah, and then you can look at keep this 50 EMA on a 15 minute to tell that's the ultimate trend of your short-term daily trend. If it gets above or if it starts trending sideways into or to the upside, it might reverse. But notice here, this 50 MA is just staying to the downside. Your 21 MA and your 30 MA again staying to the downside. Even though it gets above it a little bit, just take it off of your chart. Sometimes just take your price off of your chart. Even though it's above it a little bit, it gets above it once or twice. Look at the trend. The trend is still down. These are not curling up. These are not in an uptrend. And so these moving averages are that tell that, okay, this could continue. And so like notice it came right into this fair value gap here and then rejected. And then it came right up to this fair value gap or this order block and rejected right to that 50 EMA or 50 MA. And then this one actually ended up with after hours. This one went 5 standard deviations, which was kind of nutty, but you could have really actually only traded it to this 3 standard deviations. Gotten a little chopped up somewhere around here if you didn't want to hold, and it would be a super easy move. Just boom here takes if you don't want to hold through all of the rest, it takes an hour and a half, so hour 45 minutes from start to finish. You could get 100 points, 2 standard deviations, and be done for the day. Or you can go through some of this and hold through some of this and kind of understand that for the most part, we're looking to continue to the downside for the day. And so that's where you can, if you end up cutting here, if you do another trade and allow it to retrace, maybe you're getting in somewhere around here. I don't recommend that. I recommend either hold it from here or and trim and then allow runners to the end of the day, or just cut it all at this 2 standard deviations. That's a perfectly fine strategy. It's a 3R. You get 4R a day. You can't be mad at that. Can't be mad at that. So that was a pretty good one for today. And yeah, it would have gone an extra 45 points. And then, I mean, really till the end of the day, if you were to just held it at the end of the day, you're collecting an extra, what is this? 65 points. So yeah, that's a bit to just hold it to the end of the day. Look left to find your targets. Exactly. And then, yeah, we were mentioning this in a stock chat this afternoon too. When you have a time-based liquidity mixed up, matched up with a standard deviation, 2.5 standard deviations right at this previous day low or the Friday low, that was a really easy level to kind of target from up here. And so if you're looking at a larger scale time frame, now you can say, okay, this is where I'm starting and enter your 5 minute on a shorter time frame, and then use actual more time-based liquidity as your targets on a larger time frame. Okay, I'm looking to come here to this previous day low. Oh, it matches with the 2 standard deviations, 2.5 standard deviations. That's freaking perfect. That's a 5R, 146 points. Beautiful trade. And then there's not really anything here. I mean, we took out this low would be the next one, but this is all kind of chop. To me, I think it looks like it wants this low here. Chop around here. So like this looks like a market maker model to me. So get rid of a lot of this. It's not perfect because it's on a shorter time frame, but you have your consolidation here, consolidation one, consolidation two, original consolidation. Consolidation one here. Let me get rid of some moving averages. So for those that don't know market maker model, you have two, two, three previous consolidations, smart money reversal, and it probably looks better on a 1 hour than a 15 minute, but this is just the chart that I'm already on. And so then we consolidate here a little bit, and then our final target is to come down here. And so that would make me think that tomorrow our target is going to be this Thursday low, which this Thursday is considered a follow through day, or was considered a follow through day, which I didn't fully agree with. But that's what market school rules says, was it was a follow through day. And you got to respect that if that's what market school rule says. And so if you get below the follow through day low, generally the follow through day fails. And it was below a 30-day moving average, so I didn't really consider it a follow through day. But I kind of still follow some of those market school rules just to keep an eye on it and keep it in mind. But as a market maker model, this is what I'm looking at. Consolidation, consolidation, consolidation. This is the original consolidation that made this move. So this is where we're looking to come take out. This is actually really clean. So that means if we can get some sort of retracement to the upside into a fair value gap, that could be a level of entry for shorts. This this next 4 hour candle is probably going to create a fair value gap as well. Oh, cool. That's a 1 hour fair value gap too. Tomorrow's FOMC too. Oh, fuck. So tomorrow during the morning is going to be boring as shit. That's what I was hoping for, a move up into the fair value gap before the move down. Yeah, tomorrow morning is going to be interesting. Um, because the average move for the QQQ, and I think I figured it out that it's around a 70-point move for the NASDAQ, 60 to 70-point move for the NASDAQ is the average range during an FOMC day. The average range for QQQ is about $2.50. So that alone kind of is that alone is interesting. Means that we could create some fair value gaps. We do have one right here that you could look at, but I it didn't Nasdaq didn't take out this high. So there was SMT with this high right here with Nasdaq and ES and Dow. Dow didn't take it either, but ES did. Nasdaq and Dow did not. And Dow looks fucking terrible compared to every other index. This looks horrendous. You have this large candle created a fair value gap. Last week we came up into the fair value gap, rejected it. This is a market structure shift right there. So notice how this high, this low created a new high, and then we displaced below that low. So now we have a market structure shift, and it came down, took out these lows, which is fine, into this fair value gap, but respected the bearish order flow because it respected this fair value gap here, this bearish one, and retested this high. So my next look probably would be again these lows. And Dow is Dow is already at these 2022 highs. So we'll see how much that can give it, um, how much that can give away as well. Yeah, this doesn't look great. Oh yeah, last chart. Does anybody have any questions on any of these two? This 2 year. This is another chart I'm watching. And just this base. Thank you, Joel. So this 2 year for interest rates, this is kind of another one to keep an eye on. The 30 year has been mediocre and the 10 year has been mediocre, but this one has been holding up really, really well, which means that short term could be a little choppier too. And so targeting right now, just this 5.26 would be a pretty easy high to target because if you look at it like a larger time frame, we made this high and then this low created this high. We never created a another low. It created a strong low. And then so that would target make this a weak high to make this the target. So now we're looking for interest rates to move up, bonds to go down, um, DXY up, currencies down, and ideally, and this will FOMC could change everything. If FOMC wants to just pump it, it can change everything. But as of just technicals wise, this is how I'm seeing it, and this is what I'm looking for. And yes, we can switch it in a heartbeat and be very, very flexible if it decides if the market decides to continue up, we're not gonna just try to short it. We're just gonna wait and watch. Thanks for the breakdown. ICT has been reading price action this week, so my attention has been elsewhere. No worries. Thank you guys. I appreciate you. Enjoy the rest of your guys' evening. I'm gonna head out.